what percentage of their 2019 revenue do they need to break even, and where are they roughly now?
They probably need 50%, somewhere between 40 and 50% of last year's revenue. And actually, thank you very much for having me, Tyler. It's good to talk to you again. The other, and right now they're still down, 75, 80%. So we have a ways to go, to their point. Obviously, both are still hopeful that the government will come along with more CARES Act funding for them to get to March of 2021. I think that's the view of most people in the industry, that if they get there, things will turn around. Our view is more, yes, that will help, but we need things to open up, and we need more people flying. We need higher revenue. To your point, you asked about cost reductions. If they've done everything they could possibly do, then the only way to improve profitability or lower cash burn or get back to the plus side is to generate higher revenue. And the only way you do that is raise prices, which obviously they can't do when few people are flying. They have to cut fares to stimulate demand. So, our message is, let's get things open in a safe manner. And then I think more people will start to fly. And then I think a lot of the issues the industry is experiencing right now will be behind us, which is probably a simplistic way of addressing it.
Yeah. They've done an immense amount of job cuts. I think it's 19,000 planned furloughs at American, and somewhat less have taken voluntary retirement at Southwest. Of those two, do you have buy ratings on either of those two stocks? And if so, what is your argument for them?
Yeah, that's a fair question, and one I think about every day. And as it happens, yes, we do. Southwest is the reasons we have the outperform rating really have to do with a fortress balance sheet, a strong business plan, a good management team, a fortress balance sheet. I said that. By that, I mean that they've got a good cash position. They've got 3 years worth of cash in liquidity in the event absolutely nothing changes from here. And obviously that won't happen. We will get back to some level of profitability by 2023 or 2024. And those are kind of the 3 or 4 highlights. In the American case, that's really our contrarian idea. The company does have a stressed balance sheet, but pragmatically, so does everybody else in the industry. The thing about American that we kind of like is that their load factor was higher than the network peer group, number one. They have a smaller international footprint than either United or Delta do right now. Number two. Number three, they have no significant debt repayments due before 2022. So that puts them in a slightly better position. And number three, they've repaid, and actually so is Southwest, 364-day term loans they took that would have been due in March of next year. So I think both companies have actually gotten themselves into a pretty good position, and both are, have substantial domestic leisure exposure. And as business travel comes back, they should do well. I think Southwest said, or actually it was American said, 1 of every 3 people who flew in the third quarter flew on American, which is a pretty significant number.
Shepard Smith here. Thanks for watching CNBC on YouTube.